Welcome to the Navigating Digital Payments podcast, brought to you by Worldline, bringing you the latest innovations, trends and predictions about the future of payments.
Hello and welcome to this episode of the Navigating Digital Payments podcast. I'm joined by David Karney today, and we are going to be talking about the question, will digital currencies take over the world? David Karney is the head of digital assets at Worldline UK. David, welcome to the podcast.
Thank you very much. Really looking forward to having a good chat today.
Great to have you here with us. As a reminder, in this podcast, we're covering in each episode one of the chapters in the Navigating Digital Payments paper that was published last year by the Worldline scientific community. And obviously, in this episode, we're going to talk about digital currencies. I thought we'd start by exploring a little bit the rise of Bitcoin, what some of the alternatives to Bitcoin are, what some of the challenges are and how they can be addressed. And then at the end, I'd like to talk about this very hot topic of central bank digital currencies. So, David, I think as long as I can remember knowing you, you've always been fascinated by, in fact, I was going to say you've been a blockchain fanatic as long as I've known you. And then more recently, I guess also very much looking at the topic of digital currencies. Could you share a little bit about what led you to blockchain, what made you interested in that technology, and then the journey on to digital currencies?
Yeah, sure. I mean, I've been in big tech for 25 years, and I've always been fascinated by tech that we know that will have a big impact on the world. And you see these things coming through the gates over a period of time, and it often takes time to develop a new concept, a new technology, and it takes much longer for mass adoption to happen. I looked at the concept of blockchain, DLT, so distributed ledger technology, back in 4 or 5 years ago now. And you could see the impact that it could possibly have on the banking sector, on the future of money. At the same time, you knew that this was, in its rawest form, the ability to transfer wealth. And that gives you a very good starting point, because you have to ask yourself the question, what is wealth? What does it mean? It could be money, but it could just be a packet of data transferring from one thing to the next. And DLT and the blockchain gives you the ability to have the immutable truth of a transaction or a layer of transactions, meaning when something gets passed from person to person to person, and that could be from a merchant to a bank to an individual, we can have that record of truth. So that's where, when I joined the business and then entered into the scientific community, I was very honoured to be asked to help write that paper. And with my passion around this subject, it seemed a natural fit to dig and dive a bit deeper into this topic.
Awesome, David. So it's interesting because you mentioned there blockchain and distributed ledger technology, so that's quite a mouthful. And I remember, so in the history of this, I think Bitcoin kind of exploded onto the scene, and then that triggered interest in the technology behind Bitcoin, which is distributed ledgers. Is that correct?
Yeah, kind of. I think it should be the other way round. So DLT and blockchain have been around for some time, and whenever you've got new technologies, you've always got people trying to push the boundaries. And when Satoshi, whoever he may be, because we don't really know who he is, who was the inventor of Bitcoin, he was, I suppose people sometimes talk about anarchists. They wanted to change the world, and that's why he did it under a pseudonym. So we don't know who he is. And they launched that to the world as the first application that really the masses took up. Now, whenever you've got a new application in an industry which is unregulated, now, that's a really important factor, because that's a factor that's going to be changing. And I'm in the camp that I think regulations is a very good thing. I want that safe pair of hands to be looked after and make sure that when I buy a particular product, I can, make sure the merchant gives me what I buy. But in the early days, it's not regulated. So, when Bitcoin came to the forefront, sadly, unregulated industry means that not necessarily the right people will use it. And there's lots of stories around gangsters and villains using Bitcoin as a method of transacting money around the world anonymously. And what that's led to it's led to the ability and the drive to say, look, the technology is great, but it's not working well enough for mass adoption. And that's where we're now seeing new digital currencies coming through. And we will obviously talk about CBDCs and stable coins a bit later down the line. But, Bitcoin was the first example. I always look at it now as a store of wealth. So like having a bar of gold or a gold coin, it's how useful is it? Could you go into a shop and spend a bar of gold? No, not really that easily. Could you pop it in a drawer and leave it and let it gain in value and then be able to sell it on an exchange? Absolutely. And that's how I see Bitcoin is today. It's the grandfather of this industry, and it's going to have spawned a lot of children in different forms over the years now and in the years to come.
And as we've kind of now moved on to Bitcoin, let's hear an extract from the Navigating Digital Payments paper where we talked a little bit about the rise of Bitcoin and also some of the challenges that it creates.
Bitcoin is not the first digital currency, but it is the first digital currency to have entered into the mainstream, and its value has continued to increase over time. Cryptocurrencies such as Bitcoin have seen wide fluctuations in value, which has led some commentators to characterise them as highly speculative investments rather than meaningful currencies. Furthermore, because of the computational power required for the proof of work method, Bitcoin uses a lot of energy. So much so that there are estimates that it accounts for 0.55% of the total global energy use. It is also suspected that a quarter of all Bitcoin transactions are in some form facilitating illegal activities.
So, David, when you kind of hear that extract from the paper, it sounds like, digital currencies are a bit of a dead end, like they can't take off. So, although you were kind of alluding to this fact that Bitcoin's the first, the pioneer, and it's going to lead to something, I mean, those challenges sound pretty significant. Can you unpick them a little bit more, explain them, and maybe explain what some of the solutions could be?
Sure. Before we do that, I'm actually going to take a step back in time before we go forward in time, because whenever there's a challenge, whenever there's a change in the way that something's delivered, it always brings challenges. So I want to tell you a little story, and it's quite personal to myself, and I'll explain why at the end. But you can picture an English gentleman walking into the Middle East desert. In those days, back in the 60s this was, so early 60s, they were using the silver dollar to basically transact wealth. So the big camel trains that were coming from the Far East into the Middle East, they had chests of silver dollars, and this meant that it was completely unregulated. Nobody really had any control on it. And as the Middle East discovered oil and started to break up into different independent countries, they realised they needed currencies. They actually came to the Bank of England and said, will you help us? And the Bank of England said, yeah, no problem, we're experts at money, we can do this. So they built a team and started designing the different currencies for the different countries. Then this gentleman was asked to then go into the desert and talk to the traders, the camel traders that coming from the Far East, and say, right, we need you to swap your chests of silver and swap them for these new shiny coins. Now, understandably, they weren't that happy about that, because they were like, well, no, we're quite happy with our chests of silver. We don't want to use that currency, but, are we going to have to use it? And they said, yeah, you are going to have to use it. And if you don't, in those days, now whether this is true or not, they were told they would be executed if they didn't use it. Now, I don't think that was to be the case nowadays, obviously, but what it gave them was a currency that were regulated, that was more stable. Now, that gentleman happened to be my grandfather, Claude Loom, who worked for the Bank of England for 40 years. So I'm very proud today to see a similar journey, different challenges, but a similar journey, taking traditional currencies and moving them towards a digital world. And remember, when we talk about digital currencies, there are always normally two types. There's the retail side, which looks after which you and I would use today to, buy a particular product, and then there's the wholesale side, which is much more used for transferring very large sums of money around the world. So there are two different streams that you would use a digital currency for. But you're right, the rise of Bitcoin has led to some concerning elements to it. The power usage is a problem, all right? Now, we're seeing lots of people aggressively trying to move to renewable energies to support the mining activity that's required to run Bitcoin. At the same time, as we said before, you're seeing the growth of new protocols. Proof of work is just one of them. There's proof of stake, which is the Ethereum sort of estate, which is very clever. They do smart contracting. So not so much the digital currency side, but to do business on a day-to-day has huge benefits. And then we've got new players coming through as well, which again, very, very interesting. So, I think we're at the start of a journey, and we need to know that journey will take time, and we'll get it right and we'll get it wrong. And if you look at the big national banks, nearly all of them are going out to consultation at the moment. They're saying we take a couple of years to decide how this needs to be structured. What are the rules to give people the freedom to make that change, but also to protect them at the same time? I think it's going to be very interesting, and we must support the everyday man. The digital currency is not designed. We don't want to support gangsters out there at all. And we've seen information coming out of the Central European Bank, for example, and one of the big talking points is, would it be anonymous? And the answer is going to be no, it's not going to be anonymous. It will be confidential, yes. So you need to protect the merchant, you need to protect the user, but you must know who is transferring money from A to B, because if not, people will use this as a money laundering tool. So challenges like that are going to be absolutely critical to get right, and must take time.
So you've mentioned a few times central bank digital currencies, which I think are probably one of the hottest topics in digital currencies at the moment. So let's hear a little extract from the paper again, which talks about them.
Central bank digital currencies have the potential to provide the benefits of digital currencies, whilst also providing the stability and control mechanisms associated with fiat money. Currently, 75 countries are implementing, piloting, or investigating the use of central bank digital currencies. One example is the digital euro, which is already being worked on by the European Central Bank.
So we heard there, David, how central bank digital currencies, which are often called CBDCs, because it's a bit of a mouthful to say it out in full, we've heard there how they are really gaining traction at the moment. Do you have a few thoughts or reflections on how that development is now going and going to progress?
Absolutely. I mean, it's fascinating to be so close to this developing technology. And again, I go back to what happened 2 years ago when you had one of the big tech players said we're going to launch a currency. As we've talked about before, the regulations and compliance that needs to be wrapped around that is very important. You can't have a tech giant running a currency. It needs to be a national bank. Now, in theory, you could have a global currency, but I personally think in a realistic world, we live in sovereign states. So we live in the United Kingdom, we live in Europe, we live in France, we live in the US, and what we're seeing now is those particular individual countries are saying we want to go to market with a digital currency. I think there's about 90 plus now nations looking at digital currencies. We have one live, which is the Sand Dollar over in the Bahamas, which I think is an incredibly interesting user case. Their user case was they were sick and tired of managing ATMs, cash machines. So if you imagine you've got loads of islands, you've got to send somebody around on a boat with a pile of cash every day, filling up the cash machines. It's very expensive to do, and actually can be quite dangerous to do that as well. So they've moved very quickly. They've not got a huge nation, but they've given everybody a digital wallet. They've let merchants have the ability to spend that money. And that's all it is. Once you have those two things, then things move very, very quickly. One of the things, or the examples I often give when we talk about the adoption of CBDCs, that if you imagine a CBDC was then white labelled as a currency for a particular merchant. So say a small taxi firm called Uber, we all know it well, we all love it, popped into our world, reasonably recently if you look at the actual timeline of technology. If you go to pay for your taxi and there's a button that says £10 and there's a button that says £9, you will just press the £9. Now, if you trust the environment that's sitting behind that, would we trust Uber to look after our money end to end? I don't know if I would. But if I saw it was rubber stamped by a national bank, then I probably would. And I would just do it. And then you've got mass adoption. Another good example, I live in Bristol, and we have a local currency here, the Bristol pound. Now, it's not digital, it's paper. And I've got one on the fridge downstairs. I don't think I've ever spent it. I don't think I ever will. Now, they should have made it digital, and I think they will make it digital. But for a city to produce a money is extremely, it's quite, potentially very expensive, and they need to get it right. Now, actually, could you take a CBDC designed by the Bank of England, white label it as a Bristol pound, right, and then use that in the merchants, and whether it's you pay a council tax, you get 10% off, you pay a parking ticket, you get 10% off. And the other side of it, as we mentioned before, you've got merchants that we're using it on a day-to-day basis, and then you've got the wholesale side, the bankers. And this is where you see the rise of the digital yen, for example, which is China's offering, which is actually not a blockchain offering, but it has a lot of traits around the similar topics. If you look at what they're doing in Africa, for example, they're targeting heavy industry in Africa. And when you want to go and buy a mining rig or build a road, 9 times out of 10 you pay in dollars for that. Now, they're going to just go, we're not going to pay in dollars, we're going to pay in digital yen. If that happens, that could have a massive impact on a global platform, because suddenly a lot of the money that was coming out of the US will not be needed. And, it's things like that we need to get right, because it could have a huge knock-on effect on the global economy, and we need to make sure that it's done elegantly and securely. And they need to work together. So whether it's digital euro, the Bank of England doing it, or the sand dollar, they need to be able to work together so you can do cross-border payments, which we're all very used to. So it's going to be a very interesting time. And I don't think personally we're there yet. I think there's still stuff to be worked out. I still think that we need to make sure that you put the consumer at the heart, that to make sure that they are looked after and they're feeling they're getting a good deal.
And you've touched on several really interesting points there. I don't know which one to just ask you a bit more about first, but you mentioned was the Bristol pound, and I guess that's an example of a local currency. But as you said, there's a lot of effort, a lot of cost involved in minting a physical currency, and I guess digital currencies have the potential to lower that cost of admission, if you like, to creating a digital currency. So do you think we'll see more local currencies, more varied currency?
I don't know about local currencies, and remember, we live in a digital world now. I look at, we've got an 18-year-old in this house, cash, she just looks at us like, what's that? It's just not needed, and you say, here's a £10 note. She's like, what am I going to do with that, kind of thing? It's all on her phone. Everything's digital in her world. And, we've seen a massive rise through through contactless payments, especially with, the sadness that COVID has brought, but it's also brought one of the biggest drivers for digital change that we've ever seen. And, the rise of, things like contactless limits from £45 to £100 suddenly means it's much easier to spend money. So we live in a digital world. That's a reality check. I think the Bristol pound was too early. That's all it was. And I think they are looking now at how they would do it in a digital way. But really, I think it would be much easier if it was a white labelled version of a stable coin that's being delivered and backed by somebody who's an expert in banking, an expert in transferring wealth. But the most important thing is it needs to be convenient. It needs to be easy.
So we've talked a lot about the currency side of it, and we've touched a little bit on what that's going to mean practically for consumers and merchants. But it would be interesting to hear if I'm a merchant in 5 years' time, what is it going to mean for me that digital currency has become mainstream, that central bank digital currencies are in existence? What are the changes going to be for me?
Okay, I'm going to give you an example of where I think this would really have massive impact, because what it gives you is the ability to do business in a different way. Right? It's not just about the currency. It's about saying, well, we've got a new way of doing things. So we've got a small media company in this country called the BBC. I love it. They've had a pretty bumpy ride over the last few years with the rise of Netflix and Amazon, Disney Plus. All these different streaming services have suddenly arrived. People are engaging less in the BBC, and actually they're sitting on some of the best back catalogue in the world. Whether it's Frozen Planet, Natural History, the BBC News, all these sort of things. With the rise of digital currencies, with the rise of blockchain, they have the ability to tokenize every piece of media that they own. And in theory, now they would have to go to Downing Street and get the law changed to do this, but in theory, they could then go and sell that anywhere in the world. And rather than paying $9.99 a month like we do for Netflix, say, and watch as much as you like, you could just pay every time you click. So you pay, 10p for the Doctor Who, a penny to watch the news. But you could sell it anywhere in the world. And you would have a micro payment, and that's the key here. Digital currencies gives you the ability to do micro payments, because at the moment, if you transfer 5p, the cost of the transfer would outweigh it. It wouldn't be worth doing. So it's a really good example where you've got a merchant, okay, and that's what the BBC is. They make digital content, and we all consume it on a day-to-day, have the ability to change their whole business model and survive. And I think, in time they will do that, and in time they will end up being the greatest media provider again in the world. I do actually genuinely believe that. But it's a good example how you wouldn't be able to do that without new technology. And with the scientific community, we're always seeing us lifting the lid and looking underneath of what's coming next.
And it's fascinating to hear you say, because I think what you're touching on there is that sometimes the changing payment methods, the ability to accept more payments but with a much lower value, or to accept them cross-border much more easily, can actually then enable new ways of doing business that just weren't feasible or possible before. In the same way that it's hard to imagine, say, e-commerce having taken off without digital payments underpinning them, just to give that example. So
absolutely, or the internet as a whole. I mean, we wouldn't be here. These things that rise. And I think you mentioned micropayments, but another one we haven't talked about, and again, I could do a whole episode on this, is IoT, so Internet of Things. The ability to your fridge to order your milk and pay for your milk via the fridge, for example, or much more than the engineer who comes in to fix your fridge. He will go, the job's finished, brilliant, and he'll tap on the fridge, and he will have a stable coin or transferred to his wallet, and he will be paid for the job. So it's a completely different way of doing business. But again, without that underlying tech change, that won't happen. So, as we evolve into this new world, I think the new business models will be incredibly interesting to watch.
So, David, it's been absolutely fascinating to spend a bit of time with you discussing digital currencies. If we come back to that question of will digital currencies take over the world, I guess no one knows for certain, but the answer seems to be probably they will be very significant and important in the future, but also they'll probably be quite different to people's experience of digital currencies so far in things like Bitcoin or Ether.
Correct.
So thank you again for joining the podcast, David. It's been great to have you on board.
Thank you very much. It's been a real honour and pleasure to do this, and hopefully I look forward to discussing lots of new other topics as the time goes on.
Super. So if anyone is interested in reading more about this topic or any others, you can go to the Worldline website and download the full Navigating Digital Payments paper. You just go to Knowledge Hub, select Scientific Reports, and you can download it there. In the next episode, we will be tackling the question, do payments need to become greener? If you want to get in contact with us, give us any feedback or propose topics for future podcasts, you can email into us by writing to ndp-podcast@worldline.com. Please do consider subscribing, leave us a review, and last of all, I just want to thank you for listening to Navigating Digital Payments.
Thank you for listening to the Navigating Digital Payments podcast, brought to you by Worldline. Join us next time to learn more about the latest innovations, trends, and predictions for the future of payments.